Hi traders, welcome back to the channel. So I just got back from a little personal time off, took a trip out to Nevada. I had my annual risk management certification class that I have to take. I've been doing it 18 years and I don't know if I'll make it till 20. I don't know, I'm looking to get that gold pen for sure. We'll see what happens. I'll take it day by day. But I went to an alien museum, definitely midlife crisis type stuff, and then headed over to Laughlin, Nevada for a nice beautiful hotel along the Colorado River. Nice downtime. Didn't trade much. It was really good for the mind and also for the body and soul. Really interesting. But I started thinking a lot about my goals for this year. It's like, hey, how am I doing? It's approaching Q4. One of the goals I had was to really reduce my commissions, my futures trading commissions. They were just out of control last year. I think we have total amount up here somewhere. Yeah, I said, I got to get this down. And I actually had a positive outcome, but just was too much. In futures, you have to watch the charts a lot. So I said, how can I convert this to a profitable strategy using the same components, but just not having to deal with futures and the whole notional value of things? It's just getting too much and kind of disrupting my chi. How do you do it? Zero DTE. All right, so I never thought I'd get into the zero DTE space. I do trade options. I sell premium a lot, but really to get into the short-term stuff really wasn't my jam. And I always felt it was kind of newbie. And quite honestly, I still, this is the first time I'm really mentioning it in public that I'm doing zero DTE. It's not a big part of my trading, but I wanted to see if this would act as a replacement for my futures trading. So I said, let me just stick to my mechanics, one of my strategies that I always used, and really just convert that into a zero DTE type methodology. Should be pretty much the same outcome because I've been trading this thing for 15 years. If you want the whole strategy and all the specifics about it, just click on the link below. No problem, have it. And you can use this also with zero DTE because I want to just show you an example and then go over my sample size results. Let's see, I wanted to have a valid sample size before I just digested some of the numbers and the math and see, is this worth it? Can I continue doing this? I knew obviously the results would be a little bit less because futures, you're talking $50 a point per contract. So I knew there'd be less, but is the profit factor there? And I says, well, let me just don't judge this on a small sample. Let me have a valid sample so I have sort of a 95% confidence that I can attest and say, okay, what am I looking at? Well, let's take a look. So in order to see if this was a valid test and something I'd want to continue doing, it had to meet certain core criteria. The first one, I had to lose the ES futures and use an equivalent. And using the SPY options and also the SPX really fit that bill. It also reduced my notional amount that I was trading, so that's pretty cool. And of course, the key objective of lowering commissions. All right, next. I already have the scalping strategy. So the question would be, would I be able to apply it to a DTE type methodology? And next, if you've ever traded ES futures or any type of futures instrument for day trading, let's face it, you're pretty much glued to the screen unless you have a very, very small size, like 1 or 2 contracts, and then you can run out with a stop and target in place. Maybe a trail, something like that. But I really wanted to get away from the screen. So with zero DTE, which is obviously expires the same day, fit that bill. I wasn't sure. So I put that one to the test. Okay, so I had 2 scalping strategies that I wanted to apply to zero DTE. And at the same time, like I said, I really didn't want to watch them all day. So either the options went worthless or they hit my target. Now I'm selling premium. And the other condition was they would all be defined risk. I didn't want any naked stuff open there that in case something happens or a big news event, I'm screwed. All right, all be defined risk. And I'm using the SPYs 5 wide 0 DTE. Now the first condition, and I'll put up a chart here. The first condition is if the ES futures opened higher than yesterday's range or lower and went back into yesterday's range. That was the trigger to put on my futures trade. So I'm going to put my 0 DTE delta around 30. What I'm looking for with a 5 wide spread, I'm looking to collect 1/3 of the width of the strikes. I'll show you some final results in a minute, but that was one of the outcomes that I just kind of missed the mark. It was really difficult to get 1/3 of the width. So once it went back into yesterday's range, the premise is it's going to fill the gap, which is the prior day's close. I use that in futures trading. I use that in SP futures for over 12 years now, and it's had its quirks, but it served me well. This is the exact same conditions that I used to trade the S&P futures, the gap fill trade. And would I be able to apply it to a 0 DTE framework? All right, next condition. It's a separate trade. If the market opens inside yesterday's range, I'm talking the S&P futures, I will wait for my trend-based strategy to kick in. Again, click on the link below, give you the whole details about that. And I was going to ride that to VWAP. That is my second ES futures mechanical trade, and I'll show you an example here on the chart. So I don't have to be right on direction. It'd be nice. And certainly with a 0 DTE, my premium will erode rather quickly if it goes in my direction. So these are directional plays, but I don't have to be right all the time. If they just sit there, the premium will erode. And if you trade 0 DTEs, that premium starts to really erode rather quickly. Now, the question you might be asking is, what if it does test my strike? It's defined risk. I'm leaving it be. I'm collecting premium. So just because it hits my strike doesn't mean I'm in a losing situation. In fact, if it hits my strike and just stays there, I collect the whole thing. What I really liked about doing 0 DTE was the set it and forget it type component to it. I didn't have to watch it all day. With futures, I was pulling my hair out, my eyes like this. You ever see that cat staring out the window looking for, the master to come home? And it's just like, after a while, it's like enough. I just want to take a break. It's supposed to be, living a traveling trader lifestyle. And here I am stuck in front of a screen or in a hotel room. Set it, forget it. It's either going to work out or it's not. And after my valid sample, let's go over the results. My win rate, obviously a lot higher. I'm really not that concerned with it. The profit factor is really, really important. And that actually held up pretty well. That was right around the range of my ES futures trade, obviously with a lot less money at risk. So one of the coolest things about this is it does have a set and forget approach to things. I can just do it in the morning and leave. And if one of those two conditions weren't met, it's okay. I walk away. But most days, there was an opportunity for me to take advantage of a 0 DTE trade. All right. I've also noticed it smoothed my overall equity curve, which you're going to get with any type of options premium selling, as long as you do it correctly and have solid risk management. I want a smoother equity curve because I do have some wild NASDAQ trades on. I do trade some crazy YOLO trades. So I wanted something to sort of balance that out and smooth my equity curve. So that helped a lot. My commissions dropped from 26,000 to 4,000. That's really cool. I mean, that's 3 or 4 cruises. So I'm excited about that. So what about the caveats? What are some things I'm a little concerned about? I tried to avoid known news events. Easy said than done. Of course, this year, there was a lot of unknown news events. So sometimes it hit me. Sometimes it worked in my favor. I'm really happy about the numbers, but I'm also concerned about the positive drift factor. Everyone's a hero in a bull market. And 81%, actually 78% of my trades were long, just by design. Little concerned about that. So, was it just positive drift, carrying me to the promised land? Or was it just, really good trading? I'm not sure. I have a feeling it may be a little positive drift factor, and understand that may not be the case in the future. The SPX commissions were a little bit high. There's some additional commissions to that. So towards the second half of my sample, I moved more towards SPY options. So that was pretty cool. Like I mentioned earlier, I tried to sell 1/3 of the width of the strike to collect premium, but it just didn't happen. I averaged about 24% of the premium as opposed to 33. And I really want that 33, but it just didn't seem to happen. Also, we're trading in a very low volatility environment. So maybe this approach will work better in a high vol environment. I'm hoping that's the case, and I have a feeling we're going to be seeing that sometime in the near future. And lastly, I noticed when I placed my 0 DTE trades, a lot of the trades that didn't work ended up working if I had a 1-day DTE. In other words, they expired the next day. So towards the end of my sample, I started transitioning to a 1 DTE, and it seemed to work out better. The only problem is the ones that went right to my target, I really couldn't grab as much premium because there's a whole new day ahead of it. So I had a little problem. And also, I wasn't able to put 1 DTE trades on Friday. So 1/5 of my activity was kind of shot. But usually by Friday, I'm done anyway. All right, just a few more principles, what I loved about it. I measured my results in a series of trade, a valid sample. So I wasn't worried about every day. I had a couple 3 or 4 days in a row, didn't work out. It's okay. But I did measure in series. And I didn't want to really review or assess my results until I had that valid sample. All right, I didn't try to get profitable every day. That was really, really good. All right, it was really important too that I had a valid sample where I measured it, where I was relatively compliant. In other words, I executed when I had to. I didn't get worried about, what's going on here, oh boy, tariffs. I just set it and forget it, just traded blind, just like I do my scalping on the ES. And I only took the trade when I was available pre-market. So if I had a busy morning and I was scrambling, I didn't want to just like rush to put a trade on just to get like add to my sample size. I wanted to make sure I was prepared and ready. Okay, so the end result, I'm going to give another sample. I'm kind of digging this. I love the set and forget approach. Can certainly use that money for the commissions, make the world a better place, charity, whatever, book another cruise. I'm really enjoying that. And I'm also enjoying, most importantly, really is congruent with the lifestyle that I want to lead. So more to come. Kind of like I never thought I'd be a zero DTE trader. Click on the link below. I'll give you all the background of the strategy that I use to get me to VWAP, that sort of road to VWAP, which I call it. Really works well. I've been using it for scalping for a long time, but it certainly has made my broker rich. Hopefully that's not the case anymore. All right, I hope you enjoyed this. Hope you got something out of it. Let me know if you trade the zero DTE. How is it working out? Like any other trading strategy, you really need risk management. And I could see where some traders can get in trouble if they start adding when it's going down, things like that. Not the case here. All right, I hope you enjoyed this. Let me know your comments. Hey, maybe I'll learn something as well. We'll talk to you soon.